The market's a strange creature. It moves like the tide, steady one moment, treacherous the next. You think you've got it figured out, and then it turns around and tests every nerve in your body. But there are a few rules, 3 in particular, that made me consistent. They didn't come easy, and they didn't come cheap. I paid for them with mistakes, losses, and sleepless nights. Before we dive in, if you remember the previous video on no indicators, no stress, just profits, you'll see how that ties right into this talk. Because these 3 rules aren't about fancy systems or secret signals. They're about discipline, patience, and understanding yourself as much as you understand the tape. Now, the first rule I learned, and it took me years to truly live it, is this: don't trade when you don't know what the market is doing. Sounds simple, doesn't it? But let me tell you, it's the hardest thing for most traders to follow. You see a few upticks and your fingers itch for the trigger. You convince yourself you see a setup. But when the picture isn't clear, that's the market whispering, "Wait." And you better listen. The market doesn't owe you a trade. It doesn't care if you've been sitting idle for 3 days or 3 weeks. I used to think I could force action, like the market would reward me for being eager. But that's a young man's illusion. When you can sit through those silent periods without getting restless, that's when you begin to grow as a trader. Tell me, how many times have you taken a trade just because you were bored? The second rule, and this one built my foundation, is to never argue with the tape. The tape tells the truth, whether you like it or not. You can reason, analyze, justify. But the market's movement is the final word. When prices start to break your expectations, it's not the market that's wrong, it's you. I learned early on that my opinions were expensive, but my obedience to price was profitable. I remember a time when I tried to fight the market. The stock looked undervalued. The papers said it was a sure bet, and every friend I knew was buying. But the tape, the pure price action, said otherwise. It was showing weakness. I ignored it. I wanted to be right. That trade cost me a small fortune, but it taught me a priceless lesson. Do you ever catch yourself hoping the market will turn just to prove you right? That hope has wiped out more traders than any crash in history. You see, when I said, no indicators, no stress, just profits, in the last video, what I really meant was to trust the raw price behavior. And this rule, never argue with the tape, is exactly that principle in action. The tape doesn't lie. It's pure human nature printed in numbers. Greed, fear, hesitation, conviction, all dancing across the chart. Once you learn to read that rhythm, you stop guessing. Now, my third rule is the toughest of all. Cut losses quickly and let your profits run. Everyone nods their head at this one, but very few live it. Because when that loss hits your screen, it feels personal. You think if you just give it one more day, maybe the market will come back. But the market doesn't care about your entry. It doesn't care about your comfort. Your job isn't to hope, it's to protect your capital. I used to think small losses were no big deal. It's just 10%, I'd tell myself. But 10% becomes 20, 20 becomes 40, and soon you're defending a mistake instead of managing a trade. Then, when the market finally does turn, you're too drained, mentally and financially, to take advantage of it. You ever notice that? That after a big loss, you can't pull the trigger on the next good setup. That's the cost of not cutting fast. Consistency, my friend, isn't about winning every trade. It's about surviving every mistake. You must guard your capital as a general guards his troops. Because without capital, even the best strategy is just an idea. You can always make another trade, but only if you have the money to make it. And here's the real paradox. While you must cut losses fast, you have to be patient with your winners. The market rewards patience, not panic. When a stock starts working in your favor, most traders can't stand to let it breathe. They snatch the profit at the first uptick, afraid it'll disappear. But that's not trading. That's fear management. The big moves, the life-changing trades, come from sitting tight when the market confirms your position. It's funny, isn't it? The very skill that keeps you safe in a loss, cutting quick, is the opposite of what you need in a win. holding strong. That's the trader's contradiction. You have to be both ruthless and patient. Cut when you must, hold when you should. And the only way to know which is through experience. Not theory, not books, but actual time in the market. Now let me ask you, have you ever had a trade where you got out too soon, only to watch it double after you sold? That feeling burns, doesn't it? But it teaches you. It teaches you that real profits aren't made by constant activity, but by alignment. Alignment between your judgment, your timing, and your temperament. And that temperament, that inner balance, is the quiet thread that ties all these rules together. Because these 3 rules, trade only when the picture is clear, never argue with the tape, and cut losses fast while letting winners run. They all come down to emotional control. You can have the sharpest chart analysis in the world, but if you can't master yourself, you'll never master the market. Discipline is the trader's only true edge. It's not a secret formula or an insider tip. It's the courage to do what most won't. And when I say courage, I don't mean taking wild risks. I mean the courage to wait, the courage to accept, and the courage to act when the market demands it. Sometimes you'll feel like the market is toying with you, shaking you out right before it moves in your favor. But that's just the test. The market's always testing who deserves the profits. Most fail not because they lack knowledge, but because they lack conviction in their own rules. And if you look back at that last principle, no indicators, no stress, just profits, you'll see how all of this connects. Trading clarity isn't about predicting, it's about reacting cleanly, without clutter or confusion. These rules strip away the noise and leave you with what matters, your judgment and the market's truth. When you follow these rules long enough, you stop chasing the market and start flowing with it. You stop needing to be right every time and start focusing on being consistent over time. Most traders can't stand still. They crave action. They think if they're not in a trade, they're missing out on opportunity. I used to think that way too. I thought that if I wasn't clicking the buy or sell button, I wasn't really trading. But I learned, often the hard way, that sometimes the best position you can have is no position at all. Sitting out is a position. Not trading is still trading. It's a decision, and one that often separates the professionals from the amateurs. The market has a way of tempting you, doesn't it? You sit there watching the charts, seeing little movements up and down, feeling that itch in your hand. You tell yourself, maybe I'll just take a small trade, just to stay in the game. But that small trade can turn into a big problem because you're not trading a setup. You're trading boredom, fear of missing out, or restlessness. And the market punishes that kind of emotion without mercy. Have you ever noticed how the trades you take out of boredom almost always lose money? When I say sitting out is a position, I mean you're choosing patience over impulse. You're waiting for the market to come to you instead of chasing it. That's what a professional does. The amateur tries to make something happen. The professional waits until something is happening. The difference seems small, but it changes everything about how you trade and how you think. The hardest part of trading isn't making money. It's doing nothing when there's nothing to do. The human mind hates inactivity. It wants to act, to feel productive. But trading isn't a normal job. The best traders understand that most of their time is spent waiting. They study, they watch, they plan, but they don't act until the market gives them permission. That's discipline. That's control. And that's what separates consistency from chaos. I remember sitting on the sidelines for weeks at a time. The young traders would look at me like I'd lost my nerve. They'd be jumping in and out of positions all day, bragging about how they were staying active. But I wasn't in this business to be active. I was in it to be effective. When the market isn't showing you a clear direction, activity only drains your capital and your confidence. Do you know how many traders go broke not because of one big loss, but because of 1,000 small, meaningless trades? The market is like the ocean. Calm one day, violent the next. You don't sail into a storm just to prove you're a sailor. You wait for the weather to shift in your favor. Trading works the same way. There are moments when the current is strong, when the direction is clear, when the risk to reward is obvious. That's when you strike. And there are moments when everything is murky, when volume is thin, when the moves are choppy and uncertain. That's when you keep your powder dry. That's not weakness. That's strategy. A trader's greatest weapon isn't aggression, it's patience. The waiting builds tension, and that tension sharpens your instincts. It trains your discipline like nothing else. When you can watch a setup almost form, feel the urge to act, and still hold back until it's confirmed. That's when you start trading like a professional. The amateurs jump in early, trying to predict. The pros wait for proof. There's something powerful in restraint. When you choose to sit out, you're not being passive. You're being deliberate. You're telling the market, I'll wait until you show your hand. That calm confidence rattles the impulsive traders who can't stand still. They mistake motion for progress, but in trading, movement without clarity is just noise. You see, sitting out keeps you aligned with reality. It reminds you that the market doesn't exist to feed your ego. You're not here to prove you can trade every day. You're here to protect your capital and grow it wisely. When you stop feeling the need to always be in a position, you stop forcing trades. And when you stop forcing trades, your performance changes. You take fewer trades, but your win rate improves. Your equity curve starts to smooth out, and most importantly, your confidence shifts from excitement to control. That's the real edgy control. Not over the market, but over yourself. Every great trader I've known had the ability to do nothing, to sit still in uncertainty. They'd rather miss a move than take a bad one. Because missing an opportunity costs you nothing, but taking a wrong one costs you both money and mental capital. And mental capital. That's the real fuel of trading. Lose too much of it, and even the best setups start to look blurry. It takes maturity to understand that waiting isn't wasting time. The best trades don't appear every day. Sometimes, the entire market is in a phase where the odds simply don't favor participation. In those times, your job isn't to force trades. It's to preserve your clarity and capital. A trader who can sit patiently through a dry spell without frustration is a trader who can last through decades. The truth is, doing nothing is one of the hardest things to master because it feels like you're missing out. You see other traders posting gains, charts flashing, prices moving, and you think you should be part of it. But what you don't see are the losses behind those flashy moves. The impulsive entries, the stress of chasing noise. If you trade just to stay active, you're trading for emotional relief, not for profit. When I sit out, I'm not idle. I'm observing. I'm watching how price reacts at key levels, how volume shifts, how the crowd behaves. The best trades often come right after periods of inactivity, when the market finally reveals a clear path. If you've been patient enough to wait, you're mentally sharp, ready to act with conviction. But if you've been trading every wiggle, you're tired, uncertain, and hesitant when it finally matters. Not trading is part of trading. It's the silent half of the craft. It's where you protect your energy, review your performance, refine your strategy, and prepare for the next real opportunity. The best trades are earned through waiting, not searching. So the next time the market feels dull or uncertain, don't fight it. Don't invent signals where there are none. Recognize that stepping aside isn't missing out. It's maintaining control over your future moves. Because in the market, control, not constant action, is what keeps you consistent. Consistency comes from rules, not from excitement. Every trader wants to be consistent, steady profits, calm decision-making, predictable results. But most go about it the wrong way. They chase the thrill, not the process. They think consistency is something that appears once they make a few big wins. But it doesn't work that way. Consistency is born out of structure, repetition, and discipline, not adrenaline. Excitement will give you a rush, rules will give you a career. When I first started trading, I thought the goal was to always be right. Every trade felt like a test of my intelligence. If I won, I felt like a genius. If I lost, I felt like a fool. That's what excitement does. It makes trading about emotion, not execution. You start treating every position like a personal challenge instead of a professional decision. But the market doesn't care how you feel. It doesn't care how confident you sound or how hard you've studied. It rewards consistency. And consistency comes only when you have a set of rules you actually follow. Rules are what protect you when emotions take over. Because make no mistake, emotions will take over. The market knows how to push your buttons. Fear, greed, impatience, pride. The rules are your shield against those instincts. They tell you what to do when your mind starts to blur. You might not always like what the rules demand, but they'll always tell you the truth. Have you ever broken your own rule just once, thinking it wouldn't matter, and then watched it cost you a week's worth of profits? I've been there. Every trader has. And that's why I say you can't trade off feelings. You trade off structure. You trade off logic. You trade off the habits you've built when the market was calm, not the impulses that come when the market turns wild. Rules bring order to chaos. They keep your decisions consistent, even when the market isn't. You see, the market is unpredictable by nature. No 2 days are ever the same. Prices move for reasons that often make no sense. News hits, rumors spread, momentum shifts. It's all noise. But when you have a clear set of rules, you filter that noise. You start seeing patterns. You start responding instead of reacting. That's the beginning of consistency. Not trying to predict what comes next, but knowing how you'll respond no matter what happens. Excitement, on the other hand, blinds you. It makes you chase moves that aren't yours. It makes you enter trades too soon, or hold too long, or double down when you shouldn't. The market rewards calm observation, not emotional participation. You have to remember, excitement is for the spectators. Traders need composure, because every time you let excitement drive a decision, you lose control of risk. Risk control. That's where consistency really lives. You can't build a steady record if your losses swing wildly. The rules that keep you consistent are the ones that define how much you'll risk, how you'll cut losses, how you'll manage winners, and when you'll stay out entirely. Without those boundaries, every trade becomes a gamble. You might win big once, but you'll lose bigger eventually. The trader without rules is like a ship without a rudder. It might move fast, but it never truly knows where it's going. When you strip away the glamour and noise of trading, you realize it's not about excitement at all. It's about routine. It's about doing the same right thing over and over, even when it feels dull. The market doesn't pay you for creativity, it pays you for discipline. The best traders live boring lives on the chart. They take the same setups, follow the same steps, and avoid unnecessary risks. Their trades might look simple, but behind that simplicity is the hardest skill of all, consistency. You can always tell when a trader's chasing excitement. They talk about catching the move, feeling the momentum, getting in early. But that's just the language of gambling dressed up as confidence. The traders who last, the ones who build real wealth, they talk about process, structure, and probability. They understand that excitement is fleeting, but discipline compounds. When you trade by rules, something interesting happens. Your emotions start to settle. You stop getting shaken out by noise because you already know what to do. You stop checking your phone every 5 minutes because your system is clear. The chaos outside can rage all at once, but inside you're steady. That steadiness, that calm, is where consistency lives. And once you've felt it, you'll never trade the old way again. But let's be honest, sticking to rules isn't easy. The hardest part of trading isn't learning the rules, it's keeping them. Every trader writes down a plan. Every trader promises themselves they'll stay disciplined. But when real money's on the line, when the candle starts moving fast, when the screen lights up, that's when the real test begins. Can you still follow your rules when your instincts scream otherwise? That's what separates the professional from the gambler. Rules are boring. They don't make you feel powerful or clever, but they're what make your results predictable. When you trade by excitement, your account becomes a roller coaster. Big wins, bigger losses, endless stress. When you trade by rules, your account grows slow but steady. You don't need luck, You rely on structure. You might not always make money, but you'll always stay in the game. And staying in the game is what makes wealth possible. You can't control the market, but you can control how you interact with it. That's what rules are for. They're not restrictions, they're protection. They save you from your worst impulses and keep you from overtrading, overreacting, and overbelieving. And the longer you trade with them, the more natural they become. Eventually, they turn into instinct, the kind of instinct that doesn't depend on excitement, but on experience. Traders often say they want freedom. Freedom from the 9 to 5, freedom from limits, freedom to trade on their own terms. But true freedom doesn't come from doing whatever you want. It comes from mastering the rules that keep you consistent. Because once you've built that consistency, the market stops being a battlefield and starts becoming a business. And in this business, the steady trader always outlasts the thrill seeker. Opinions are expensive. Discipline is profitable. That's one of those truths you don't fully understand until the market teaches it to you the hard way. Every trader begins with an opinion, an idea about where the market should go, what a stock should do, what price makes sense. You build stories around your trades, convincing yourself that you see something special. But the market doesn't care about your story. It doesn't move to satisfy your opinions. It moves where it wants to, and if you're not disciplined enough to respect that, it'll take your money faster than you can blink. I learned early that opinions can be seductive. They make you feel smart. They make you feel in control. You read a few reports, see a few patterns, and suddenly you're certain about what comes next. You start saying things like, "It has to go up," or "This level can't break." But when you say, "can't," in trading, you've already lost your objectivity. The market has no can't. It does what it does. Discipline is what keeps you from betting too heavily on your own ego. Have you ever held onto a losing position because you didn't want to admit you were wrong? That's what opinions cost. Not just money, but mental peace. The best traders don't marry their opinions. They date them, briefly, cautiously, and with an exit plan. Discipline means being able to change your mind when the price action tells you to. It means respecting the tape more than your prediction. You can have a great theory, but if the market disagrees, your theory isn't worth a dime. That's where discipline steps in. It reminds you that survival matters more than being right. When I was younger, I used to argue with the market. I'd tell myself, it'll turn around, even as prices kept sliding. I'd double down, thinking I was getting a bargain. What I was really doing was defending my opinion instead of following my rules. Every time I did that, the loss grew bigger. The market punished my stubbornness until I learned the lesson. Your opinion might make you feel powerful, but discipline is what keeps you solvent. Opinions make traders reactive. Discipline makes them proactive. When you trade from opinion, you wait for the market to confirm what you want to believe. You ignore signals that contradict you. You start seeing what you want to see, not what's really there. But when you trade from discipline, you don't need the market to validate your feelings. You've already decided how you'll act no matter what happens. You have your entry, your stop, your target, and your risk defined. The market doesn't surprise you because you've already planned for both outcomes. That's what real professionalism looks like in trading. Every trader needs to understand that the market rewards behavior, not belief. You can have a perfect prediction and still lose money if your behavior isn't controlled. You can be wrong about direction but still come out ahead if your discipline keeps your losses small. Discipline isn't glamorous. It doesn't make headlines. But it's the quiet force behind every long-term winner. When I say opinions are expensive, I don't just mean losing money on a bad call. I mean the cost of attachment. When you're emotionally tied to a trade, you can't see it clearly. You hesitate to exit when you should, and you overstay your welcome when things start turning. Discipline cuts through that noise. It lets you act without hesitation. It tells you your stop was hit. Get out. And you do, not because you like it, but because you respect the rule. That's how you survive the long game. The market isn't a place for pride. It's a place for adaptability. You can have the sharpest mind in the room, but if you can't admit when you're wrong, the market will humble you fast. Discipline is humility in action. It's the voice that says, follow the plan, not your feelings. It's what saves you when everything inside you wants to do the opposite. Tell me, how many times have you ignored your stop loss, hoping for a bounce, only to watch the price sink further? That's the cost of opinion. It's a debt every emotional trader eventually pays. I've seen traders lose fortunes defending ideas that looked brilliant on paper. They'd say, it's undervalued, or it's due for a correction, and they'd keep saying it all the way down. The disciplined trader doesn't think that way. They don't need to be right. They need to protect capital. Discipline says, the chart disagrees. Step aside. That's it. No debate, no ego, no second guessing. Just execution. Discipline also gives you freedom. It sounds like a contradiction, but it's true. When your actions are guided by rules, you're free from confusion. You don't waste energy wondering what to do next, because your plan already answers that. Opinions trap you in doubt. Discipline releases you from it, and that clarity lets you focus on what really matters. The process, not the outcome. Another thing about opinions, they feed on hope. When you believe something should happen, you start hoping it will. Hope is dangerous in trading. It clouds your judgment. It keeps you tied to losing trades and makes you exit winners too soon. Hope belongs in life, not in the market. The disciplined trader doesn't hope, they act. If the market turns, they adapt. If the setup changes, they move on. No drama, no emotion, just logic. Discipline doesn't mean being emotionless. It means managing emotion. It means feeling the fear, the greed, the frustration, but not letting them dictate your moves. That control builds confidence, and confidence built on control is unshakable. Once you've experienced that, opinions lose their grip on you. You stop caring about being right and start focusing on doing right. Every trader must decide what they want more, to be entertained or to be consistent. Opinions entertain you, discipline pays you. The trader who chases excitement will always be chasing recovery too. The disciplined trader might look calm, even boring, but they're the ones still standing when the crowd burns out. And in trading, longevity is the truest measure of success. When I look back on my own journey, the turning point wasn't when I found a better strategy. It was when I stopped treating the market like a debate and started treating it like a business. A business runs on structure, not speculation. Every trade became just another transaction governed by rules. No attachment, no arguing, no emotional outburst, just execution and review. That shift, from opinion to discipline, is what changed everything for me. Trade only when the market's direction is clear. It sounds simple, almost too simple, but this single rule has saved me more money and heartache than any complicated system ever could. Most traders think they need to be in the market all the time to make progress. They think action equals opportunity. But in truth, the real power lies in waiting. Waiting until the picture is unmistakably clear, until the market itself shows its hand. The market doesn't hide what it's doing, it just moves at its own pace. The problem is, most traders can't sit still long enough to see it. There's a certain kind of silence in the market before a real move begins. The volume calms, the volatility shrinks, the patterns tighten. It's like the sea before a storm. You can sense something's about to happen, but you don't know which way the wind will blow yet. That's the time when you must hold your fire. The impatient trader tries to guess. The disciplined trader waits for confirmation, and guess which one ends up surviving long enough to trade another day. Have you ever taken a trade just because you were tired of waiting, only to watch it move against you almost immediately? That's what happens when you trade in confusion instead of clarity. The market pays in proportion to your patience. When the direction is clear, everything aligns: price action, volume, sentiment, and most importantly, your conviction. You don't second guess yourself. You see it, you know it, and you act decisively. But when you trade in uncertainty, you hesitate. You enter too early or too late. You move your stops around, trying to make sense of the chaos. You're reacting instead of executing. And that, right there, is where inconsistency is born. A clear market doesn't mean you know what will happen. No one does. It means the probabilities are in your favor. It means the trend is established, and the noise is minimal. When the price is breaking levels with conviction, when pullbacks are shallow, when reactions are predictable, that's clarity. That's when you step in. Everything outside of that is guessing, and guessing is the fastest way to turn trading into gambling. I remember a time when I couldn't stand being out of the market. Every day I'd open the charts, searching for something to trade. If nothing looked obvious, I'd convince myself that maybe, just maybe, I could make something out of nothing. And you know what happened? I ended up making trades that had no business being taken. I wasn't trading opportunities, I was trading impulses. The market doesn't reward impulsive behavior, it punishes it. Every random trade cost me a little more discipline, a little more confidence, and a lot more money. Trading only when the market's direction is clear also protects you from noise. News, rumors, social chatter, they all try to pull you into the chaos.